Welcome back, everyone. In this video, I'm going to be going over some ways to earn some dividend income, or rather just income itself, in a practically risk-free way. So this video is going to be great for people that want to earn some money in a risk-free way and basically want to think of another thing to do with their cash. Maybe they have some money in a savings account that isn't really earning any interest, and they're wondering what they can do with that money to gain some income. Now, I do own this ETF that I'm going to be speaking of too. I own SGOV, and I have about $376, not so much because I just started this investment about a month ago. So still building it up because I decided to kind of transition away from just keeping it in a conventional bank account because you get more interest with this strategy. Before we get into the nuts and bolts of this ETF, if you do enjoy this content, give this video a like. It would be greatly appreciated. It'll help this content get out there to a wider audience, and subscribe for future content. So as I said before, the ticker symbol of this ETF is SGOV. It is the iShares 0 to 3 month Treasury Bond ETF. Great ETF, again, for people wanting to earn some risk-free income for their money, and then also a very simple ETF to understand overall. So why is this ETF considered essentially risk-free? Well, the investment objective of this ETF is to track the performance of an index composed of U.S. Treasury bonds with the remaining maturities less than or equal to 3 months. So this is going to be essentially Treasury bills with a very short duration. So if you look at the holdings of this ETF, as I said, all Treasury bills, every single holding essentially is a Treasury bill. Maybe it is a different expiration date, but at the end of the day, it is all Treasury bills. And the only risk with this ETF essentially is the US government stop functioning. So that is pretty much unlikely to happen, and it's unlikely to happen in the short term, of course. And also, because this is a short-term ETF that tracks short-term treasuries, the interest rate risk is also very, very low. Any fluctuation of interest rates will be quickly absorbed by a new Treasury bill because these are expiring so quickly. And as far as expenses of this ETF goes, it is very cheap to hold. This is an ETF comparatively to other ETFs that kind of do the same thing that is relatively cheap. So you have an overall expense ratio of 0.09%, and that is really good for what this ETF does, especially if you don't want to go about the time of opening up a Treasury Direct account and then doing it yourself. For those that don't know, Treasury Direct is a website operated by the United States government. It allows people to buy Treasury bonds or bills or notes directly. And essentially, when you set up an account with that, you do need to enter quite a bit of information. You know, your driver's license number, social security number. It pretty much is just like a bank in a certain way with the information that it requires from individuals. And then you also have to go about selecting these bills yourself. So SGOV is a great way to get around that inconvenience. You could just buy this directly from your brokerage account to keep extra cash available when you sell this ETF. A bit about the dividend that this offers. The dividend yield is currently 5.3%. So that is a yield that is quite a bit higher than a lot of higher yield dividend ETFs that operate in a conventional style. Of course, you'll get covered call ETFs and other higher yield ETFs that offer greater yield. But compared to many ETFs, SCHD, VIG, DGRO, this ETF here will pay generally higher than all of those ETFs do as a yield. And this ETF pays every single month. Again, this kind of operates as a secondary bank account because most bank accounts that I know of also pay monthly as well. And then the dividend yield is going to definitely change as interest rates vary over time. But as I said, that won't affect this ETF's price too much at all because these are short duration bills. So any change of an interest rate will be quickly resolved when that bill gets reshuffled over. So you'll lose the dividend yield, of course, but as far as the price goes, you don't really have too much to worry about. As far as the price of this ETF goes, it is very narrow. This ETF operates in an extremely narrow range. As you can see from all time, the ETF is only up 0.44%, so not even 0.5%. And you do see some spikes and declines here or there, and that of course is based on the interest rate changes. So this ETF went up in value as interest rates also increased, but even the highest peak is only around 0.6% from the lowest valley. And you see that it immediately changed very quickly back to where it was. So again, this ETF operates essentially as cash. You can't necessarily say that it's 100% risk-free because there are very, very slight variations over time. And depending on when you buy and sell this ETF, you might lose a cent or two in capital appreciation, but you're going to gain that back from the dividend. And also, you're really not going to have that much volatility in this ETF overall, as you can see by this price chart. So there's other bond ETFs. Another very popular one is the Vanguard Total Bond Market Index Fund. So this tracks the total bond market. And there is going to be quite a bit of variability in this because this does hold a longer duration bonds, bills, and notes. So this ETF is going to have quite a bit more variability, and as you could see, there is quite a bit of loss. So if you were thinking, oh, well, I'm holding a bond as an ETF, well, this is going to really hurt you, of course, because the highest peak is pretty much 22% above the lowest valley. So you'd definitely be hurting if you were buying this ETF here and then selling it a few years later. So SGOV is a great way to mitigate that because, as I said before, the real hallmark of this ETF, the great thing is that it holds short duration treasury bills from the US government. So not only is the volatility of those treasury bills very, very low because the government backs them, it's also very low because the term to expiration is also very near date. So essentially, me personally, I hold this as quasi-cash after my savings account, which yields about 4.25% at Ally. I put my money into this ETF here, and gold. Again, it operates as quasi-cash. You can get some capital appreciation over time from gold, and also generally get a higher dividend yield or interest payment from SGOV than a typical savings account because you're buying a direct. You're not really having a middleman. Of course, banks use your money and then use that money to basically lend out, and they get money for it and then pay you interest. Well, I skip that middleman and just buy it directly. So it's a good way to earn some money on its own that is higher than a traditional savings account. And then again, gold there acts as the inflation hedge, somewhat a volatility hedge, an alternative asset. So I like holding both to get that good interest and then also having an alternative asset and then that inflation hedge possible. So anyway, I hope you did enjoy this video. I know I threw this out there because I wanted to give you guys a good summary of an alternative way to put your money where you don't want to maybe hold an ETF because you are very risk adverse, an ETF like a dividend ETF, because you don't want to hold an ETF that has some risk like SCHD, which can go up and down. For the treasury markets, SGOV is a great way to earn a good interest rate on your money with essentially no risk. So I want to thank you all for watching. Please remember, if you did enjoy this content, give this video a like. It'll help this video get out there to a wider audience, and also subscribe for future content.